Hello, you're watching Proactive. I'm joined by Chris Jordaan. He's the president and CEO of Superior Gold. Chris, it's good to speak with you today.
Hi, Stephen. Thank you very much and appreciate the opportunity.
Well, Chris, for those viewers not familiar with Superior Gold, could you tell us a little bit more about the company?
Yeah, it's got a prolific past. Plutonic mining was started in the 90s, and I think cumulatively it's produced about 6 million ounces in its life. And talking about life, we're in the process now of finalizing our resource and reserve statement, and we'll be making that available at the end of this quarter, early next quarter. So that'll give us some insight and give the market some insight as to what the future is going to look like insofar as life of mine is concerned. So Plutonic used to be operated and owned by Barrick. It was then subsequently sold off to Northern Star, who in 2016 sold it off to our founding CEO, the then CEO, Chris Bradbrook, and to Superior Gold. And that was the whole Plutonic operations, which include the Hermes South project, and also an 80% share in the Bry Basin JV with Alchemy, where we typically have Hermes South and a few other targets there. Currently, we're operating the underground mine and the Perch open pit mine. Now, Perch is also on our property. It's just southeast from the main pit, where the underground also starts. So those are the two current sites that are in operation. Our blend, typically, we get about 45% of our feed from open pit and about 55% then from our underground mine.
What does that do to your cost base? Because it must be obviously cheaper to do the open pit mining.
Yeah, look, it's a function of grade at the end of the day. If we look at our open pits, they operate at about 0.6, 0.7 grams a ton on average, and our underground mine runs at about 2.7, 2.6 grams a ton. So it certainly pays its dues. What we have seen with our increasing production from the underground, that we're getting significant improvement on our fixed cost dilution, needless to say, and we're seeing further reduction in cost this year from our underground mine.
In fact, you're out with results from Plutonic this past week, and your 2021 production up 32% from 2020, but also beating your guidance. So obviously good news coming out from Plutonic.
Yeah, I have to say it was a really good year last year. Needless to say, it took a lot of hard work, and my appreciation and thanks goes out to every team member there and service provider that we use. And it's important because our service providers play a key role in our drilling program, as well as a key role in our open pit operation. So it's been a fantastic team effort. It's basically testimony to the work that Tamara Brown started when she was the interim CEO. There was a pivot from on the underground mine to target a minimum stope grade of 3 grams a ton, and we're happy to say that we've achieved it consistently, and that's been one of the major drivers. One of the other major drivers that improved our production is the fact that we moved away from stockpile material into new, fresh open pit material. We started off with Plutonic East in April, May last year, and in September we moved into Perch, which is still in operation at the moment.
And you also reported strong cash flow and a strong cash position. So that must put you in a strong position as you do advance the Hermes South project.
Yes, certainly. There's certainly a bit of work that we still need to do around the Hermes South project. We're looking, at it with new eyes, specifically where the gold price is today, to see, how we can best progress that project. But in the meantime, which we're really excited about, we were able to identify a specific area in the main pit, which we call main pit deeps. And basically what it does is drawing forward cash flow from the main pit pushback, albeit not affecting in any way the resource of the main pit pushback. So really a good step forward for us there. We're looking also to see quite a significant jump in our grade, up to a max of about 2.5 grams a ton from that open pit, as opposed to the typical 0.6, 0.7 that we're getting now from Perch. So that also constitutes a significant makes a significant contribution to our guidance between 80 and 90,000 ounces this year.
And you are an unhedged producer at the moment. So with gold around that $2,000 mark and an all-in sustaining cost of about $1,400 an ounce, you're sitting pretty at the moment.
Yeah, I have to say, I think from a personal perspective, the main driver for the gold price, does not sit well in my mind. Is very unfortunate, what's happening out in Russia and the Ukraine. But we're not here to talk about that. Certainly, we're using the opportunity to do the best or make the best out of where the prices are now. It is, however, somewhat challenging. Nobody knew where the price is going to go. We planned a shutdown for this quarter. We're in the shutdown now. So at the time we had these significant prices, we had to cut back production because we're going through this planned shutdown. But it's a very important shutdown. It's an investment on our infrastructure, which has been running for 30 odd years. It's the first time that this work has been done on the SAG mill. So very important work that we have to do and get it over and done with.
Looking forward to 2022, I mean, you talk about advancing value enhancing projects, and we've chatted a bit about the operations. What sort of news flow should investors be looking out for?
Yeah, I think what's important to measure our performance against is whether we're going to achieve that increased production from the underground mine. We're getting about 2.6 to 2.7 grams per ton total out of the underground, which is a significant driver for our production. So last year we produced 835,000 tons from the underground. More importantly, in the last quarter of the previous year, we were running at a mining rate or annualized mining rate of about 900,000 tons a year. And that's in fact what we're targeting this year to deliver. So we want to keep that rate consistent and see that through the rest of the year. However, we have plans also to ramp up the production from the underground mine, and we hope to achieve towards the end of the year an annualized rate of 1 million tons from the underground.
Chris, put forward your investment case. Why should people invest in Superior Gold?
Well, firstly, if you look at our current production profile and how that's improved, and we're seeing costs reducing, and that consistency flowing through, but also at the same time seeing that we're reinvesting into the business for the longer term or medium term, longer term sustainability. I think that's a very important element. Another element would be that our exploration results have proven to be very successful. What we see last year, we mined the underground purely from remnant mining. This year, we're targeting up to 30% into new areas, and that is testimony to drill work that we did last year. So I think the key takeaway there is we've demonstrated that we drill one year and the next year we turn it into cash flow. So that turnaround is really exceptional in my mind. So that also gives you a sense of where we're taking the business. We got a very clear, very concise growth plan. That growth plan is mostly driven up to that 100,000 ounce mark with our own properties. So I think we've got clear line of sight where we're going to go there. And this year, we're heading towards that 80,000-90,000 ounce mark. Along with that, the other benefit we have is that we've got significant growth potential because we have about 1.2 million tons milling capacity, which is latent at this stage. So if we get the ore, we can start that up. So that's into the future. And then lastly, the important thing is our resource and reserve statement is currently under review. We've recruited an external organization to do some validation and verification on it, and we hope to present that in March. And I think that at that point we'll package it up nicely, reducing cost, stable operations at the moment, looking forward to increases into the future. We're to a large extent in control of those assets that will help us grow to at least 100,000 ounces. When we go beyond that, I guess we have to look across the fence. But then once again, the investment case there is, we within 150k radius, there aren't any other latent capacity, milling capacity out there, and we can get that mill going for significantly less capital than what a new facility would cost. So needless to say, we've got growth potential. We're building our future through the drill bit, and we're continuously improving our cash position through increasing margin.
Hope you'll keep us abreast in all those developments, but thank you very much for the update today.
Thank you very much. I appreciate it.
That's Chris Jordaan. He's the President and CEO of Superior Gold.